This is Kathy Barrett with Cornell, with Cornell's Pro Dairy program, and thank you for joining us for this dairy webinar. We're going to be talking about crop insurance for corn and soybeans this afternoon. And to do that, we have with us Faye Benson, who is a dairy educator with the Cornell Cooperative Extension Central New York Dairy Team. So Faye, why don't you go ahead and get us going?
Okay, thanks, Kathy. So yeah, this is a production of the USDA's Selected States Grant. And really what this, my talk today is just some things a farmer who is thinking about getting into crop insurance should need to think about before they go and see an agent. The Selected States Grant was developed by USDA because as you see in the picture on the right, crop insurance is heavily used in the Midwest. And they realized that in the Northeast and in New York in particular, there wasn't a lot of usage of it. And that's mainly, I presume, because we're a dairy state. And so even poor crops get to be used as animal feed or animal bedding. But they're coming up with new policies that will benefit New York. So they wanted farmers to get more comfortable with it. So that's why they've put together a Selected States Grant for farmers' education on crop insurance. And you're probably familiar that the government is getting away from the disaster payments that we used to rely on for droughts or excessively wet weather, and they want to get away from that. And they see crop insurance as a better way to have farmers deal with the risk management through by having skin in the game. And the timing for this talk today is, I just want to show this, the sales policy date is March 15th. So it's next Tuesday, that if you want to get crop insurance, you need to be in touch with a crop insurance agent before that date. And I have this slide again at the end, and we'll go over some of those other dates. But I first wanted to just share with you some of my experience when I was a dairy farmer. There was a particularly wet year, and the county was declared a disaster area, and farmers could apply for a disaster payment. And after filling out the extensive paperwork to get that payment, one of the requirements was that for next 2 years you had to purchase crop insurance. And having never dealt with crop insurance, I just looked at the different policies and saw CAT coverage, or catastrophic coverage, was, I think at the time, was probably in the area of 150. I think now it may cost $300 for CAT coverage on a crop. But what I found was that that CAT coverage really didn't cover very much at all. It only covered, it started out at 50% coverage. So you had to lose at least 50% of your crop before you even got a payment. So the example was that if you lost 60% of a crop, which is, very difficult to do with, say, corn silage, but if it did happen, the CAT coverage would pay only 50% of the value on 10% of that crop, or the 10% that's above the 50% that it starts with. So that it just really, there was not much chance to get paid for. And I think this has been the experience of a lot of farmers, that they thought CAT coverage was crop insurance, but they have to realize that it really isn't. So I just want to share experience with another farmer who has used it. And let me get this video going for you.
This is a family farm. My wife's family has been here since, was it 1794 maybe? But then it was kind of outside the family for a while. It was on the edges, cousins and all. And when I moved to this county as a county agent back in '63, we got married in '64. Then we moved here at this home, which was her grandparents, in '65, spring of '65. So at that point, I started with 2 calves a few years later, and then I kept raising heifers and finally bought the farm next door, which is the one that we're mainly operating now. We've got just shy of 900 cows, and we raise our own heifers. And our cropland, I think it's about 1,800 acres. That includes what we manage ourselves and what I purchase from. So I purchase from almost 200 acres. So that gives us about 16 that we're operating. And all of our corn is for silage, and all of our hay is for silage. So we have about 800 acres of corn, and that would make it about 800 of hay. That includes the seedings as well. I learned about crop insurance several years ago, and then I've carried the minimum coverage through FSA, the 50%. But then I learned more about this type of crop insurance, so I did the 50% for a year or two. I think I did it 2 years. And then I took out I don't remember my percentage, but it's probably about a 65% rate on crop insurance. So I did that, and then I forgot to report on time. Well, that was no good. But then I made a big mark in my calendar the next year and took it out again, and I went to the 75% because it looked as if economically the subsidy for the premium was pretty good, and I thought, well, if you go 65, you might as well go 75. So that's what I did, and it's worked very, very well for me. But I did two things. I went to that 75% rate, and I also learned about dividing up the farms because I rent a lot of land. About 2/3 of our land is rented, and only a third is our own. So our own land had manure for years, and we had good yields here, very good yields locally, but the other land was not as good, did not yield as well. So by dividing the units according to all the FSA units, that way we got a bigger benefit because those yields were lower and below that level, that 75% level. So I would say that we've done very well knowing how to work with the program. And there are those opportunities of separating your fields or the farm units, and you can get a higher percent. And it's worked out very well for us. Well, it's helped our business because of the financial security it offers. The premium is one thing. You never like to pay premiums. I'm not an insurance man. I'll have to admit that up front. I do not like insurance, and I try to avoid it at all costs. That's probably why it took me a few years to get into crop insurance. But once I was in it, it's obvious that it gives you some financial security because the last 2 years, we've collected good amounts with the crop insurance program. Our weather's not been good, and the way the program works, we got some good payments from that. And even though our yield was not great enough to really support the whole herd, because of the crop insurance, we can afford to purchase whatever extra feed we need. So it was a good year to have it. 2009 was not a good year for dairy farming, as everybody knows. It was a very poor year cash-wise. But with that income from the crop insurance, that gave the cash to purchase more feed, which we've had to be doing this year. The crop insurance part has been good, and it's subsidized heavily. So the premiums that we pay are much reduced from what it would have been. And there's about 2 or 3 times the payout that compared to the premiums the companies take in. So you know that it's going to be a good program for dairymen. Well, yeah, there's several records you need to keep to make crop insurance work well. You certainly need the measurements of the silage in the bunk silos, and the adjuster helps you with that. So he will do that portion. So therefore, you can measure what you harvested. I also purchased some silage. So it's very important that I keep records of what I purchased and then back that out so that's not counted as production. And then the other important thing is to keep track of the loads or the yield, the production from all the separate units. And that's a challenge. You have to stay right on it every day to keep a notebook in the trucks to be sure that you keep accurate load counts. And that's what's going to allocate your production back to those individual units so that if some are not producing well, you will get the coverage. Well, I know in the past, as a dairy industry, we have not taken a strong advantage of the crop insurance program. I guess I'm not sure exactly why. I know that if you're in the cropping program or crop business, then insurance and futures and all that is much more part of your mindset. Dairymen haven't had that, but we're learning. But with RMA, it offers a good educational program. So I took advantage of that, attending some of the meetings and learning more about crop insurance, and that's how I've gotten into it. And I feel that if a lot of other dairymen, I know a lot of other dairymen could benefit as well, as long as they have these same criteria. If they have units they can use, I think that's especially important. But even without that, if they go to the meetings and sit through the sessions to learn about crop insurance, I think it would apply to many farms. A lot of people.
I just wanted to play that part there that what Dave Wood was talking about. And as you might have heard that recording was done a few years ago. But the experience he had was, very valuable. It's a good thing to share the problems he had with not signing up on time, his trying to understand the units, how they could work on his farm, are the important messages that I'm hoping to cover today. So the units that he was talking about, there are three that they talk about. There's basic units, optional units, or enterprise units. And we'll cover that a little bit more later. But that's part of your choices, and you need to be thinking about before you go talk to an agent. And then you have to, when listening to Dave, he was talking about his concern was keeping his yield of corn silage and haylage. So that was what his focus risk that he was worried about. But then other farmers may be concerned about market prices. And I've worked with some farmers that have used mainly the crop insurance for the prevented planting option that comes with it for excessively wet springs. And crop insurance does cover the weather conditions, droughts or excessive moisture, but it also has cover for insects. But you have to show that you've done your due diligence, document it, that if you've had specialists in or had spraying done, you need to document that. And the same with plant diseases. You can't just say at the end of the year, I've had plant diseases. You need to address them during the growing year. Wildlife, you wouldn't think that'd be a big deal, but I've seen a farmer collect a lot of money just for his woodchuck damage to the soybeans. Then again, the market fluctuations, which we saw a lot of last year with the soybean prices. And crop insurance does work in New York. The slide we're looking at here, the red is the payout to farmers, the indemnities paid. And the black line is the premiums that the farmers had to pay. So first looking at the premiums, you can see that starting in 2005, they were down less than $5 an acre average. But then over the years, it's gone up. And what that's designed to do is that if the farmers aren't being paid very many indemnity payments, then it doesn't raise their premium payments. But as indemnity payments go up, the red line, then the premium payments is also going to go up. And that's kind of how risk management works, that it spreads out that risk from the years where you had a heavy exposure to risk to the other years. But in this case here, that from I think in 2010, I think that's when they actually brought in the revenue policy, was the first year of that, and that's really helped a lot of farmers. Before that, they only had the yield protection. So an example of basic units, and this is probably most farms, they are simply the Farm Service Agency's field number. So if you have only one number for your farm, then your only choice is to have as a basic unit. But if you have, like Dave had, he had his own farm, he had rented farms, and some farmers have, like even farms they own with different farm serial numbers, then they can have optional units. And this is the way Dave worked the program. He had an actual production history for each of the different fields so that they were all insured separately. And he found that gave him the best coverage. And then there's the enterprise units, which is if you have if you qualify for optional units, or you have multiple farm service numbers, farm field numbers, then, but you combine them all back into one unit again. So that even your low producing fields, you combine in with your high producing fields. It really lowers the cost of your policy, but it also lowers your chance of collecting a indemnity on it. So this is the premiums that the government covers. And you can see on basic and optional units are the same. For the 50% coverage level, it's 67%. And then as the coverage level goes up, and now you can buy up to 85% coverage on your corn or soybeans. And the premium coverage goes down to 38%. But then you can see in the enterprise units, if you combine your optional units back into one, they increase your subsidy quite a bit. Some of the side coverage that you get with all crop insurance, whether it's the yield protection or if it's the revenue protection, you always have replant payments, so that if your farm experiences either 20 acres or 20% of insured acres, they pay you 8 bushels per acre of your guaranteed price. So it's like this year, I think the corn price is 8 bushels per acre. I'm sorry, $4 a bushel. So that if you had a replant situation, they would pay you 8 times 4 or $32 an acre to go back and replant again, and then carry on with your crop insurance for the rest of the year. And then they have a similar, 1 ton per acre for silage, or 3 bushels, the value of 3 bushels for soybean. And that's just to replant. Late planting, they've set for New York is June 10th. They hope that you have your corn in by then. If you plant your corn after June 10th, it'll actually reduce your guaranteed payment by 1% per day for up to 25 days, which means that if you wait until July to plant your corn, they won't cover you with crop insurance. But the one that a number of farmers enjoy with certain springs is prevented planting. And so that same date of June 10th, if you're not planted by that time, and you can document it either by from a weather station, or if you contact your local extension person saying, testifying that you'd had abnormally wet weather keeping farmers in that area out of the field, then they'll pay, you have to leave your land idle, but they'll pay 55% of your guarantee without planting anything. And the farmers that seem to like this one are growing 5 or 6 crops during the spring. And so if they get behind waiting to get their corn in, it puts all the other crops behind as well. So this one allows them to just leave the corn ground bare, fallow for the year. They can plant a cover crop, and you'd have to talk with your insurance agents I think there is some time after November that you might be able to harvest that. But that just gives you some other options. And the soybeans, it's 60% of your guarantee. And you can actually up that prevented planting coverage when you sign up with a crop insurance agent. So the revenue protection, again, this last year with the tariff problems and the trade causing the drop in soybean prices especially, really helped protect a lot of farmers from these unexpected market fluctuations. And you can, the revenue protection, APH stands for actual production history. So you have to have an approved history on your farm. And again, work with your crop insurance agents to put this, you need at least 5 years to come up with an APH. If you don't have 5 years of documents or records, you can use the county average yields for your area. But this is usually quite a bit lower than most people's actual production history. But the coverage choices for this range from 50% of the value of crop up to 85% of the value. And again, it includes replant and prevented planting. And the way they come up with the revenue protection price is that in February, they look at the December's Chicago Board of Trade, and they take the average of the month of February to come up with a projected price, which was just announced, I think it was last week, so that the farmers now know what their projected price is. And I think I have them in the slideshow coming up. So they do a similar thing for the soybeans. They figure out the average February price for the November contract of soybeans. And then at harvest time, this next October, they will take the month of October looking at those same December for corn and November soybean prices, and then announce in early November what the harvest price is. So this was the guarantee that they announced recently. So for corn grain, $4 a bushel, you can figure your guarantee on that. If you're insuring silage, it's $36.50 per ton. For soybeans, $9.54 a bushel is the guarantee price. So just to do a quick estimate or an example, we're looking at actual production history for corn, and we're going to compare the yield protection as to the revenue protection. So if we say their yields was the same, 150 bushels an acre, they had the same coverage level of 75%. This slide was made a few weeks ago that they estimated that it was going to be $3.96 a bushel, but now we know that's $4 a bushel. But they made it for the same for both. So the guarantee for the yield was 113 bushels, which is 75% of the 150 bushels. So you had that guarantee. And with revenue protection, it puts a dollar figure on it. So they take that 75% of the 150 and then multiply it by the projected price to come up with a $447 projected price. And then the actual yield is the harvest yield. So in this example, it was 110 bushels per acre for both examples. And so in the yield protection, the difference was 3 bushels an acre, or 3 times 396, which came up to $11 per acre indemnity payment. But in revenue protection, they took that reduction in yield, and then in this case, the harvest price was also lower in November of that year, so that the value of the harvest value was 384. So 384 from the guarantee of 447 meant that the farmers were paid $63 per acre. In this example, typically last year this would have cost for revenue protection was $7 to $17 per acre, and for the yield protection it'd be $5 to $13 an acre. Excuse me. So this is, these are the important dates. And remember, Dave was talking in his part about, he'd signed up on, it's always March 15th every year to sign up and get a policy with your crop insurance agent. And even if you just call them and say you're interested in doing it and getting the acreage down, that's all you really need to do to get started. So you can call them on the March 15th and get this started. Of course, it's better to do it ahead of time. But so then the final planting date, we talked about that. It's always June 10th is when they need to have crops in. So after that, you either continue on with your coverage, but your guarantee is reduced by 1% for every day for 25 days. Or at the June 10th, you select to go with the delayed planting, which then you'll take a payment to leave your crop acres fallow. So by July 15th was the report date, and this was the date that Dave said he forgot to do on his first year of doing it. So without reporting on that date, his policy, he paid for it, but didn't get any value out of it. So he said he marked the next year, he marked that onto his calendar to be sure it was done by then. And then the billing date from RMA comes on August 15th. So you don't have to pay for the policy until most of the way through your growing season. If you do have a loss, they require you to let them know at least 15 days prior to harvest, or if you have hail damage or specific damage to your crops, they like to know within 72 hours so you can contact your crop insurance person. Or and you know, and that's good advice to always have good communication with your crop insurance agent, so there's no surprises. And you know, then the end of the December 10th is the end of your policy. And without crop insurance, this is your alternative. I think more and more farmers are realizing that some of the weather patterns we're having, we can't count on just a medium bad year to a medium good year. We have some very exceptional extreme weather events, and so having something like crop insurance is a better way to cover these crops. So I'm working with Cornell's Risk Management and Education Project, and here's their website where you can get some more information on this. I think one of the, if you're looking for a crop insurance agent, which is the key to having success with this, with any kind of crop insurance, is you need to, best way is to ask your neighbors who they use, if you know somebody who uses crop insurance, and that if you don't have access to that, go to your farm service agency. They should have a list of crop insurance agents in your area. So with that, Kathy, I guess we'll take some questions.
Thanks, Faye. That was very well done. So any questions for Faye? Feel free to unmute yourself or to put your question in the chat box. And we'll just give folks a second to do that.
Okay. Yeah, over the years, I've seen, you know, I've been working with this crop insurance education probably for the last 10 years. And when I used to do booths at trade shows and whatnot, the experience of, you know, like a bad experience of having catastrophic insurance, thinking you were covered and wasn't covered, was very common. But it's really good to see we're seeing more increase in use of the policies, and because of that, we're getting more crop insurance agents.